So I made over $12,000 on the day trading continuations. As you can see, there's $2,000 in profit on a live account here. And if I flick over to my TradeAvert, you can see that there's a $2,000 profit on Apex, but that's copied across 5 accounts. And in this video, I'm going to be going over 2 key concepts when it comes to trading continuations. That's going to allow you to master the art of trading continuations. I'm going to break it down in the simplest way possible so you guys can understand it very clearly, with the hopes that you guys can go ahead and start using these ideas in your trading, because it is just going to elevate your trading and your understanding of price action that much more. All right, so before I get into super detail about the specific things that you need to look for into continuation setups that make continuation setups work, I first need to give you guys the basic smart money logic behind continuation setups, because if you can understand this, it's just going to make your understanding of overall price action better, and it's going to allow you to be able to take much better continuation setups, and you're going to find you're going to be able to become a lot more consistent in being able to spot continuation setups and knowing how to deal with continuation setups as they form, because that's the most important thing, right? Is being able to capitalize on these moves and be able to pull a profit from the market. And if you listen to everything I'm going to share with you guys in this video, because everything has to come together for it to make sense to you guys, you're going to see you're going to be well equipped to actually start trading continuation setups. Because until I learned about continuations and I learned how to look at continuations in this way, it was hard. I'm pretty sure you've all experienced it. Like, you get in a setup and it makes sense to where price should be going to, but then you always find yourself that, okay, price reversing, and then you immediately get stopped out. There is no worse a pain than that. But if you understand the key details I'm going to be sharing with you guys in this video, it's just going to make sense. It's going to click for you. You're going to realize, oh, okay, that's what I was going wrong. This is what I should have been looking for this. This is what I should have been looking for that setup. And then everything's going to come together. So be sure to stick around and watch this video all the way through to the end, because everything literally matters. All right. So for those who don't understand what continuation setup is, or don't even know what continuations are, what are continuation setups, right? Continuation setups are very simple. Continuations are literally that. It's literally trading in the direction of where the market is already moving. And I wish it was a lot more complicated than that, but it's not. But where it becomes complicated is knowing how to apply yourself within this fractal or within the direction of the market, because it's easy to be able to see, okay, the market is going high, but how do you actually participate in that move, and what do you actually look for to know if this is a high probability move? That's the key that makes continuation setups works. That's the key that helps you identify what a high probability continuation setup is. And it's this information that I'm going to be sharing with you guys as we dive deep into the video. That's what's going to make everything make sense. With trading continuation setups, the reason why I love them and the reason why I say they're low hanging fruit and you can actually find them and be able to trade them consistently is that you're literally using reference points to what the market has already done, and you're using that logic and that understanding to be able to predict and know whether you're currently in a continuation, and then you're just literally just sitting in along for the ride. But it comes down to understanding a few key concepts, and one of those key concepts, right, is realizing and understanding that high probability setups contain an element of accumulation, that is a terrible A, manipulation, right, and distribution. Every single high probability setup is going to contain an element of this fractal, right? This process of accumulation, manipulation, distribution is exactly how price delivers within a high probability price run. For example, in a high probability price run, like let's say this was a bullish example that we're looking at, right? In a high probability price run, we're going to see an element of accumulation, which would be like a consolidation. So price could be consolidating here, right? And then we're going to see the manipulation. The manipulation is designed to offset traders. So if we're going to go higher, that manipulation is literally designed from a smart money perspective to trip traders in the wrong direction of markets. As traders see price going lower here, they're going to be thinking sell, sell, sell. And because we know price wants to go higher and we have an over understanding of price is reaching for, we know that this is a false move. And most of the time as traders, we're trying to catch the market here, right? We're trying to catch the market at this manipulation standpoint and trying to get in so we can get in near the low, whatever, and then so we can literally ride price as it goes higher here, right? But if we understand that the framework of a high probability price run contains this accumulation, manipulation, and then this distribution, that's a key component to understanding how price delivers. And that's very important to understanding where continuation setups form, because our continuation setups are going to form after the manipulations happen. They're going to form in the distribution phase. So now all you need to do literally as a trader, as a smart money trader, right, is be able to identify that price has manipulated, and then when you see the distribution side of the market, and how do you know that price has stepped into distribution, right? My favorite ones are breaker market structure. If price manipulates, trades into an opposing PDRA, I want to see a breaker market structure. That breaker market structure after the sell-off actually confirms that price has gone from a sell program into a buy program, and then from a buy program we're going to have that distribution leg, and that distribution leg is where this continuation subs are going to form, because now it's just a matter of just getting in line with what price is going to do. And in distribution, that's when price becomes one-sided. In that one-sidedness of price, what happens? Okay, well, in a buy program, we anticipate that institutional order flow, or just call it order flow in general, is going to be bullish. So what does that mean? That means that bullish fair value gaps are going to be respected, bullish order blocks are going to be respected. So you're anticipating that continuation element of price. So you don't need to be confused with, oh no, how do I know that price is done manipulating? Well, you use the confirmation of the market structure. The market structure confirms the change in the state of delivery. How do I know that price is now in a distribution phase? Well, you've seen price manipulate. And how do I know that that is manipulation? Well, that is where we use our times of day, like the midnight opening price. We use that opening price. Any move below the opening price against our intended direction, that is going to be deemed manipulation, because smart money accumulates longs below the opening price and smart money accumulates shorts above the opening price. So if we're bullish and we see price go lower at the right time of day, like the London session, do you see how we're building this framework now? The London session, the AM session, we see that opposing move against our intended direction of price below the opening price. That could be the midnight New York opening price, and then in the AM session, that's the 9:30 opening price. A move below that, that is what we'd anticipate to be manipulation. We're not saying 100% it is. We anticipate that to be manipulation. What confirms it? What confirms is that after we've seen that move lower, trading into an opposing PDRA, that could be a fair value gap, an order block, we get that bullish market structure. That bullish market structure confirms the change in the state of delivery. So we're literally seeing the price delivery build out. And the beauty about continuation setups is that we're using that information. We're literally going to the market after the manipulations happen, and we're judging whether the manipulation is in or not by just looking at these key frameworks. Have we manipulated into an opposing PDRA? Yes. Have we broken market structure? Yes. Okay, this is a high probability that price has gone from manipulation as now in its distribution phase. Now in the distribution phase, what are we looking for? We're then looking for, if we're bullish, we're then looking for institutional order flow to bullish. So what we're looking for, for our fair value gaps to be respected and our order blocks to be respected. And that is exactly where our continuation setups are going to form, and that's it. And then all we're simply doing is just literally waiting for those fair value gaps retrade and those order block retrades, and we're literally just getting in on that, because we now have the confidence that price has finished manipulating and price is now in its distribution phase. The other key component that makes continuation setups work is, okay, we know price is continuing, but where is it continuing to? Because that's the other element of continuation setups, right? The simplest thing you got to remember about this, right, is that, okay, we know that the manipulation is a key important factor to be able to know that price has gone from manipulation and stepping into the distribution phase, right? I've gone to the market, I've identified that price has gone from manipulation to distribution. Now, okay, how do I know what price is reaching for? How do I know where price is continuing to? Because of course, price is gonna has a target in mind, right? And then once it reaches that target, then you might get that retracement or reversal. But how do I know where price is reaching to? Okay, the simplest way to understand this, guys, is this. The market is only ever doing two things, right? The market is either seeking liquidity or inefficiencies. That's it. So within this price delivery, price's aim within this whole delivery, right, is to either reach into an inefficiency, and inefficiency can be in the form of a fair value gap. Liquidity could be old highs, old lows, and high probability liquidity pools are previous days lows, previous 3 days lows or highs, weekly lows or weekly highs, monthly lows or monthly highs. Those are all high probability liquidity pools. So if you have those marked out in your charts, you have an understanding of where price is going to be reaching into, because You're marking out high probability liquidity pools, so you have that edge of, okay, I know where it's going to be continuing to. Now, for example, let's say around this area here was an old daily high, right? Simple stuff. Old daily high right here. We know that a key component on price is to seek liquidity or inefficiency. So if the price is trading near an old daily high, an old daily fair value gap, an old 4-hour fair value gap, and we see this price delivery set up like this, and we've been able to go into the market, we've been able to see, okay, price in London made a low, broke market structure to the upside, confirming the change in the state of delivery that, okay, price has gone from selling into a buy program. Okay, where's it reaching for? Okay, there's a nearby old daily low up here, so there's a high probability chance that price is going to be continuing to this old daily high. So if you have these inefficiencies and liquidity pools marked out in your charts, you anticipate price reaching into that, and then you frame your setups around that idea. And that is it, guys. That is the key. You know where price is going to be continuing to, because it's only ever going to be a fair value gap, a gap, or a liquidity pool. And by virtue of you seeing the accumulation happen and then the manipulation happen at the right time of day, and then you see the breaker market structure confirming the change in state of delivery, you're building this narrative that, okay, price is going to be reaching into these areas, and then you're just simply getting in line because you understand that in bullish institutional order flow, bullish order blocks are going to be respected, bullish fair value gaps are going to be respected, and then you're getting in that way. And that's it, guys. That is the key to literally trading continuation setups. It's literally looking at what the market has done and then using that information to be able to know where price is reaching for, and then you're just getting in line. That's why I love them, because they're so simple. You don't have to worry about, oh no, am I going to get stopped out? How do I know if prices has stopped manipulating? You don't need to worry about any of that. You're literally going to the markets after all this has happened, and you're using that to build a narrative and an understanding of what price will most likely do. And by you looking at price this way, you're going to be able to read the market much better, because as long as you understand that a high probability price run contains a degree of accumulation, manipulation, distribution. Manipulation is a key important part to be able to gauge whether the market has turned around or not. So if you can identify manipulation, how do you identify manipulation? You identify manipulation by seeing price go below the opening price at the right time of day. That could be the London session or the AM session. In the London session, you're using the midnight opening price, and you're using to gauge the manipulation. In the AM session, using the 9:30 opening price to be able to gauge the manipulations. Any move below that, if we're bullish, of course, that's going to be high likelihood that that is manipulation. Then we confirm that by waiting to see the breaking market structure. So it's just a matter of a waiting game when it comes to trading continuous setups. But if you can be patient enough to see these things, because if you're seeing these patterns and these signatures in price form, you're literally seeing the price delivery build out right in front of you, and you're literally just using that to be able to make better decisions on your trade setups. And that is it, guys. That is literally the secret and key components to literally trading continuation setups. Because if you actually understand the logic behind accumulation, manipulation, distribution, the logic behind the manipulation, the logic behind the where is it continuing to, it can only ever continue to two things, liquidity and inefficiencies. That's going to increase your ability to be able to read price. And then you're literally just looking at price, seeing what it has done, where it's coming from, and then you anticipate where price is going. And of course, having a high time frame bias makes this a lot easier. If you're bullish on the high time frame, or you're bearish on the high time frame, you're just simply then looking for these signatures and price to happen at the right time of day. And then you're literally just trading in line with that, because you know on the high time frame price is bullish. Just be patient and then use this logic I've shared with you guys in this video to be able to trade continuation setups, and then you're going to see that you're going to have a high likely chance of finding consistent setups. If you guys want to see how I specifically trade the AM session, I'm going to link a video to it right here. Go check it out. If you guys want to see how I trade the London session, I'm going to leave a link in the description below. Go check that video out, because I have shared like super other details that I obviously couldn't cover in this video around that, but it builds out and it all makes sense. I hope you guys found a ton of value in this video. If you did, let me know in the comments below. Like, comment, subscribe, and I'll see you guys in the next video. Peace.